So hello again and welcome to another edition of High Tech Connect interviews. This year, you're speaking a lot about angel investment, venture capital investment, startups in Europe, of course. And today we focus on the angel investment scene in Europe. And I have a very exciting sparring partner with me today who knows this extremely well because he's since now nearly 10 years the director general of the EBAN, the European Business Angel Network, which is the association of all the country angel investment groups in Europe with probably thousands of angel investors. Welcome, Jacopo Losso. Great to have you here, Jacopo.
Thank you so much, Ralph.
Great. I think it's Jacopo. Sorry for that. Americanized everything. So EBAN is existed since 25 years. You're there nearly half of the time, and you guys are growing and growing. Unlike in the venture capital scene, the angel investment scene is actually not so far off. Still, relatively off from North America. But angel investment scene is actually pretty good. I guess you guys are one of the reasons why this is going quite well. But before we jump into that, maybe you intro yourself. How did you come into this position? What's your background, and what qualifies you to talk to about this topic today?
Yeah, definitely. Thanks so much for the invitation, and hello to everybody in the community and in the audience listening to us. I started at EBAN fresh out of university after doing a couple of internships and more larger established corporations. I was really interested in getting much closer to innovation and closer to companies in very earlier stages of their life. And the interest was coming from really things I was studying at school. So I studied management in a very good university in Italy, and I got exposed then. This was around 2008, 2007. I got exposed then to the world of startups, which I think was kind of new or not really that popular in Europe. Already much more popular in the US, but still. That kind of really sparked an interest, and I was interested in particular in how such young businesses with unproven products, unproven markets, and basically unproven everything are anyways able to solve problems and scale and grow into very large enterprises very quickly. And of course, in those early 2000 years, there weren't many examples of startups, but we had already seen a little bit kind of the quick evolution of companies like Facebook that was launched more or less in those years. Skype, which by then had become a pretty major player in online communications, I guess you could call them now. And anyways, all of this kind of exposure to this industry got me interested. And so through my university, I was able to find EBAN, joined the EBAN as an intern, and very quickly then was hired to lead the association. And I've been there enjoying it ever since. And obviously, in my early years, I was a lot less knowledgeable on this industry, but I was very passionate about it, quickly learned quite a lot of stuff from people I was working with, in particular the board members of our association, EBAN, who are all angels and also very good mentors. And still today, many of them are my mentors. And then that's also a big reason why I ended up staying. I just love a lot this space. It's always, every year it's new. It's always reinventing itself. And I enjoy being very much here in the middle of this ecosystem with a very nice bird's eye view of all of the different activities angels are doing around Europe. So that's kind of in a nutshell my my story.
Yeah. So you certainly have seen a lot, in particular in the angel investment scene. So that's why we talked to you today. But I'm sure most folks know what angel investment is, but let's just spend 2 or 3 sentences on what's the difference between a venture capitalist, which probably everyone knows, and an angel investor. Is this about money? Is it about certain legal things? You're the man.
Yeah.
Very briefly, don't make it any academic.
No, not at all. But very, very simply. So, business angel is a person. It's a man, woman, that ends up investing their own wealth that they've accumulated in their life, be it because they also were an entrepreneur before becoming an investor, or because they had a very successful or have a very successful career in corporates, and they're reinvesting their own wealth, and in addition to that, they're investing their own connections and their own experience and putting that to the table. And so basically, an angel brings three big things to the startup, and the funding, obviously, but even more so importantly, the connections to potential clients. For example, your startup could be servicing connections to maybe other investors that could be funding you as your company grows, connections to great talent that they may know because of their exposure already in the startup community. So there's a lot of different connections, and there's also that been there, done that before you, which they bring to the table in the form of advice, mentorship. So it's kind of like a friend in your company, although it's a shareholder, and they come in with the same exact expectation that any other investor has, which is to make a good return relatively soon. But I would say the big difference between them and the VCs are, one, they're investing their own money, whereas the VCs are typically company that is managed by a professional team that is investing on behalf of limited partners their wealth. And so the completely different way of working and motivations and also behavior, I would say, changes quite a lot when you're investing your own or when you're investing on behalf of somebody else. And then the other thing is, many times the VCs don't really get way too involved with the startups they invest in, whereas the angels usually do dedicate a lot more attention day to day with to the founders. I mean, this is maybe not always 100% the case, but usually there's a bit of a more involvement from the angels in their portfolio companies than typically a VC would be having.
Right.
Yeah, so those are at least like two big major differences. And I would say when you're an entrepreneur and you're fundraising, usually your first round is going to be coming from a business angel, because they're the very few people capable of accepting the risk reward trade-off in investing in your company in that specific moment when you're fundraising. And because angels invest their own money, they are usually able to tolerate a lot more risk, hence why they invest in the startups, usually as the first professional investor after, the 3 Fs and after grant money is being put in.
Right.
And VCs typically invest a little bit later, although that is kind of changing nowadays. But still, angels make up more than 50% of all pre-seed money going into startups.
Okay, so let's jump in. Thanks for the long intro, though, and competent intro. So compared to the US, I think we are doing relatively well in Europe. On the venture capital side, I think the numbers are much more extremely different in terms of investment, much more done per capita in North America than here. But venture capital, angel investment wise, this doesn't look so bad. So if you would compare now the European scene to the US scene, what are major differences still?
Yeah, so American investors have been around for many more years than investors in Europe. So there's a little bit of a legacy history explanation to that as well. Angel investors in the US have existed, I would say, as of the 1960s, 70s, really, with the first private individuals investing either directly or through some kind of a family office setup, or at times maybe even by setting up a venture fund. But that is very different, I would say, than in Europe, where the source of capital has, for many reasons, usually been coming from either the founders, or if it's external, it's coming in the form of a loan from a bank usually. And that is very different, though, in the US, where a lot of the funding tends to come in the form of equity funding. But I would say the United States community is anyways roughly 3 times the investment size compared to Europe. So US is investing roughly 20 billion a year in startups, angels in the US. And
You're talking angel investment now, right?
Yeah, angel investment in the US, at least according to statistics coming from New Hampshire University Research Center has an observatory measuring the market there. And it's roughly 20 to 25 billion plus minus the estimation, but whereas in Europe it's roughly 7 billion. So it's still not as dramatically, distant as maybe the VC world is, but it is still a little bit smaller. The curious thing is that the population, though, of angels in the US relative to Europe is exactly the same. So we invest about a third less, and our deals are also less big. And the typical round in the US for that an angel invests in, often when you talk about that in Europe, it feels more like the Series A round that a VC in Europe would invest in. So companies raising 2 to 3 million at an 8 to 15 million valuation. These are kind of the numbers that often you hear coming from the United States as, the averages and medians that of the deals they do. So, and that's simply because the scale up potential in that market is so very different than it is in Europe. So Europe has a single market that is not extremely easy, though, to grow and scale up in, because it's anyways there's 27 member states in Europe, plus other countries that are still part of the let's call it free trading zone, and but in practice there's a ton of local regulations and differences between the countries that make market entry for a European company a lot more difficult than entering, for example, a different state in the United States. So there's a lot more of a single market for companies to grow in, and valuations are bigger, fundraising needs are much bigger, and everything is more or less about 3 or so times as large as it is in our continent. So that's a bit the difference. But yeah, I would say as Europeans and as American investors, we think very similarly in how we do the deals, and how we structure the deals, and often the terms that we're asking. It's not very different, but what is different is just the size of those rounds. They're so much larger in the US compared to the European market.
Yeah. Yeah, so I actually heard numbers of 11 billion in Europe, but I'm sure your numbers are more correct. It's less than I thought. Yeah. So how has it developed since the last 10 years? Let's take this time frame, since you are now at EBAN. Has Europe caught up in numbers, and has something changed, or pretty much the same, or even?
No, it has changed for the better, and it's been definitely year after year we're seeing strong growth in terms of investment and in terms of angel network population and amount of angels around. So it's growing on all levels from anyways a relatively kind of small starting point. So most of the growth actually has been, I would say, in the last 5 years. So between 2018 and 2023, the market almost tripled in Europe, and that is very much due to the popularity of startup investing also catching up big time here in Europe. So all of a sudden, we start to see some important companies, startups become major companies. We start to hear in the news about, certain names doing IPOs. We start to see a lot of investors celebrating huge returns. We start to see some of those exited founders start new companies and have success once again. And there's this cycle that has basically really started and then picked up big time with success calling in more success and calling in more investors. And I would say that has arrived in Europe a little bit late, probably like 7-8 years after maybe the United States market. But it then it then grew quite strongly. And nowadays, like I was saying before, in Europe we have a relatively sizable community of investors that invests very actively, and that is also very much thanks to all of the things that have happened in the past decade when it comes to startups becoming success stories, exiting, and providing their investors very nice returns, and more people pursuing the startup career. So more smart people coming out of university, or maybe very smart people spinning out of a Google or spinning out of an Apple or spinning out of, you name it, big tech company based in Europe, starting up their own tech companies as the next thing to do in their life, as opposed to, maybe just finding another job in the corporate world, as it was very, very normal in past decades.
Right. And are there any areas in Europe where you in particular see even more catching up happening? I mean, than compared to others, or is pretty much everywhere the same?
Well, countries in Europe have had their different dynamics. Some countries, and I think like, the UK has been a startup ecosystem and an angel ecosystem really since, I would say the 80s and early 90s. It was already common to hear about technology spin outs coming from universities and fundraising for capital. And, even the fiscal scheme in the UK is, I think, coming from the mid 80s, the small enterprise investment scheme and the enterprise investment scheme. I think those are, very old initiatives, which already say a lot about how mature the ecosystem in that country in particular was. But, in Europe is very different, and we have countries that used to be part of the Soviet Union since not that long ago. We have countries that were very, very aligned with those kind of ways of doing the economy, and very industrial based countries, and so the story has been a little bit different. But I would say there are some more established and major ecosystems where growth is less strong, but it's now stably very active and vibrant ecosystem. So take the Berlins and Parises and so on of Europe, which rank above, in the top 20 of the world, depending on which reports you want to believe. But and then you have countries that are very quickly catching up. So we see most of the growth happening really in the Baltics, in the Central Eastern European countries. Also, countries in the Nordics have grown really fast in very little time. So it's a little bit kind of a different, depending on where you are in Europe, the whole evolution of the startup market and how venture capital and angel investment has also grown, hand in hand with the startup ecosystem, with some players starting, already as of the 90s or early 2000s, and some others more catching up and trying to, grow very quickly. Some examples, if you want. I mean, a country, I'm from Italy my country, for example, has woken up to this startup economy and VC investment opportunity pretty recently. I would say maybe maximum 10 years that in Italy you start to hear about initiatives to help startups, that you start to see the VCs popping up. Now we have in Italy some fiscal programs to help de-risk investment. We have some fund of funds programs from the public development bank, co-investing with the VCs, co-investing with the angels, and that has really sparked very good and strong growth in that community, although it took a while to see it.
Right. Yeah. So talking about EBAN, the organization that you represent, and what you're doing, I had the pleasure last year to attend one of your yearly events. It was in Thessaloniki. I was quite impressed. It was really very professionally done, and of course you always go into a country. It appears to me this year it was in Estonia, right?
Yeah.
And then, of course, you drum up the whole startup and angel community there, and it goes all the way up to the ministers. There was like a endless group of ministers giving speeches. Everyone was jumping on. You really rallied the whole country, it looked like, with organization for this couple of days event. So that was very impressive. I'm doing events myself, but you guys steer up a whole country with just one event. And you obviously, I'm sure you get some momentum there going, doing the event. And so what else are you guys doing apart from this event to support this whole angel investment scene in Europe?
Yeah, thanks. So basically, the events are a way for us to connect investors, and we do two of them. One moves around city, which is the one that we recently did in Estonia. Next year, it's taking place in Copenhagen, Denmark. And we do it for a reason to attract the whole international ecosystem of investors, VCs, and startups to connect and to discover a local ecosystem in Europe. And it's all done with the intention to promote relationships and ideally cross-border international investments between angel and startup communities in different parts of Europe. And that's a big reason we do the event rotating ecosystems, and then the event in Brussels we do every year in October. This year it's on the 15th and 16th of October. That's done every year in Brussels, again, with the idea of bringing the European ecosystem together, this time in the capital of the EU, and in addition to the networking, also to be in better dialogue with the public stakeholders. But in addition to that, EBAN does a lot of other activities to promote networking. We believe very much that the best startups are sourced from all over the world, and the best startups also need investors based from all over the world if they want to scale and if they want to fundraise and keep fueling their growth. So having, as an angel investor, good and quality connections to co-investors around the world is excellent for your current investments, and it's also excellent to make new deals, ideally in vetted quality companies that are being referred to you from your own personal network. So that's the idea, and we do a lot of international activities to promote connecting investors. Secondly, we do a lot of training and educational activities, and we call them best practice sharing activities, to transfer knowledge, transfer know-how from individuals or entities that have been investing and have been kind of building up a specialty or an area where they're particularly experienced in, and we facilitate this knowledge transfer. So we do workshops, we do webinars, we call in people from the network that share what they know and how they've built that kind of expertise. And then the third thing is we are an association representing the market towards the public stakeholders at a European level, and to some extent also supporting the members at a member level, at a country level. So we do different kinds of research. We write different market studies, position papers, and similar to advocate in the interests of angel groups, both at EU and at national level. So I would say those are the three things we do to help angel investors be more successful in their investment activity, to be networked around the world with the best investors that we can bring to them, and to be doing angel investment with the highest standard and best kind of professional approaches that you can have. So that's a bit the story about what our association does. And we have about 120 community members. These are clubs of business angels in most cases. In some cases, they are VCs, they are accelerators or venture builders, and other entities that are investing very early on in the startup life cycle. And we've reached out to roughly 7,000 or so individual investors affiliated to those member groups part of EBAN. So that's a bit the community, and it's all over Europe, not just the EU, but all over the European continent, plus a few other parts of the world that are in the neighborhood. So Middle East, North Africa, Central Asia, besides also having some very good links to angel groups in North and South America as well.
Right. Yeah, as I said, I was quite impressed. You guys are doing great work, and it's growing and growing. That's fantastic. Let's still talk about the catch-up to be done. We still don't have in Europe a Google, right? We don't have the other big internet companies who created, hundreds of thousands, each of them, jobs, right? We have some nice success stories, but not these very, very big ones that everyone knows yet. You think that's just a matter of time because it was started much later, and it will definitely come, or are we maybe also not striking for the huge Champions League victory and invest, ruthlessly enough like others are doing, US and China? And naturally, if you invest, a huge amount and take huge risk, then you will have better chances to land the very big success stories, right? I don't want to down successes that we have here for sure. It's great, but we don't have one single, I would say, right? Apart from 2 or 3 that you could mention. If you go 40 years back, we just don't have them yet. How do you see this? Is this for sure coming, or do we have to look at the books and substantially change something in terms of how we take risk and how we attack this and prioritize it, right? Make it a huge priority, which for sure it is not right now. I mean, it's gaining a priority, as I can see, but I wouldn't see the same level of urgency that probably US would bring it up if they would be relatively far behind still, right? I mean, we are particularly in the venture capital scene, we are hugely behind, right? It's factor of hundreds per capita invested in Germany versus the top areas in the US. It's not just the 2 or 3x as in angel investment. We are talking hundreds of investment per capita, and that's like day and night, right? So yeah.
No, it's I mean, the short answer is I'm rather doubtful that Europe will invent in very short time a global player in the digital internet businesses. So yeah, I don't see us anytime soon rivaling, the Googles and the big kind of corporations that I think you're alluding to. But I do think that Europe does have the ingredients to potentially be a global player in certain technology areas. And I think when you look at European innovation coming out from research and university centers, I think it's a shame sometimes we're unable to keep funding such innovation and research, and then those projects move and end up getting the funding they deserve in a United States or maybe UK. But we do have, I think, very good scientific driven innovation, which I think has a place at the global marketplace, has a seat at the global marketplace table, unparalleled to US and Chinese innovation. Now, how we then transfer the innovation to the market and build a company and a scalable business around it, that's another different story. And how it's then funded by investors, that's another story. But at least we have, in my opinion, still the trampoline to jump off of, which is the science-driven capacity of our research and university centers. And I would say if Europe is able to harness technology transfer and own that aspect of the innovation cycle much better, and keep funding it in Europe and then crowd in more and more private investors, I think soon you will be seeing European-born companies maybe leave Europe and go to US for bigger money they can raise there, but it's still, I think, is fair to call them European companies, even if they're maybe no longer only headquartered in our continent. So I would say I'm very doubtful that in very established technology areas, ICT and even artificial intelligence, and there's many technology areas where I think we just lost the train that left the station maybe a decade or so ago. We were busy saving maybe a airline company, or busy saving I don't know, an industrial group that employs hundreds of thousands of people. We were way too busy thinking of maintaining employment in sectors that were disappearing. And then I think more recently came to the realization that that's just simply how life goes, and the economic cycle, the natural cycle of businesses, sometimes you can't really prevent it or stop it. It's just some things deserve to be left to the market and move on, and but I think now we have in Europe the biggest deep tech investor by far in the world, which is the EIC. We have a ton of money in national development banks earmarked to be invested into deep tech related areas. We're trying to catch up big time when it comes to building global success stories. But I think at least we have one of the ingredients that's needed to really have a good outcome, which is the technology and the human resources that understand the technology. And let's see how things evolve, but we have some opportunities in front of us that can be solved with very advanced cutting edge tech. And I really have high hopes for many ventures that are being funded today, that we will see them solving some of our big problems, I hope, in the next 3 to 7 years.
Right. Yeah, I have followed the high-tech scene since, I would say, 25 years. I've been in Silicon Valley 20 years ago. So I was part of one big wave at the time. There was optical and data communications. Today, stuff is a commodity you can buy very cheaply. But at the time, there was invested billions. Not one single European company participated. After that came other waves. We know, of course, e-commerce. We know the wireless, right? And now artificial intelligence. So all these waves that are triggered. Of course, there is a in a short amount of time winners and losers. Unfortunately, yeah, at that time we had some European participants that didn't succeed, but now I hardly see any participants because we don't have the pockets to participate. Look at the large language models. Okay, we have 2 European funded, but they're all funded mostly, nearly all from US money too. We just don't even have the money anymore. So my question is, would it be justified to put government money into this? Lots of academics actually are calling also for this. They're saying that we need to have government money to jumpstart this, to have this.
That's what we're already doing. Yeah, definitely. I mean, we've been doing this. As Europe as a whole, and then in member states, this is also the trend. The biggest VC investor in Europe is, I think, the EIF, followed by BPI France. So the biggest venture capital investors in Europe are 2 development. Well, one is an investment bank for Europe, and the other is the development bank for France. And they have position in countless VC funds in France and across Europe. And so it's already happening since a long time that we are dumping a lot of public money into the VC industry to prop it up and to attract new waves of VCs, new fund managers, and so on, that are now having a much easier time at closing their fund because of also the support from the public.
But is it maybe too widespread? You sprinkle the stuff over all the 27 countries in Europe, and everyone gets a little something. But at the end of the day, you need to, of course, be ruthless as well and say, okay, we have a few. It doesn't matter where they are, who are high hopes. They have jumped at this new wave at the right time. Let's put most of the money into them, and the others, okay, we're too late. But you need to look more. Let's say in the US you have a startup in the East Coast, and they were at the right time. Then they're getting lots of money. And then in that case, the West Coast wouldn't get it. Like in fintech, for example.
So in
it looks
Europe,
like everyone gets the same proportionally, and you end up with literally nearly nothing. But of course, not a big.
I think the big issue isn't so much this that everybody gets the resources or scattered. I don't think it's that issue. I think the issue in Europe is we don't really have growth funding investors in Europe. So I'm talking about after Series B, when startups are raising maybe 30, 40, 50 million euro rounds at valuations that are 300, 500 million. We have very, very few venture capital investors that invest in that growth phase of the company. And they're literally, you count them maybe on 2 hands. And that's a big problem because those companies will then fundraise from another country, the US probably, and the US investors, in order to invest, will impose certain conditions so that company, first of all, gets domiciled in the US for taxation purposes and for reporting purposes to the LPs. Like, this is no-brainer, immediate consequence. And then you risk really losing entirely the operations of that startup in Europe and have everything transferred over to the US, which is really the big loss for our ecosystem. So how do we solve that? I think if the public wants to support more startups to stay in Europe, easily we can do more programs to do growth funds and co-invest and back those kinds of entities, and create more incentives for those growth funds to be also investing and staying with the companies invested here in Europe. And that means to intervene a little bit more now on the policy and regulation side more than just the the programs and defining how the instruments are to work. But I think that is the real issue I think we have in Europe, that there's not enough growth funding. There's plenty of seed and Series A, and it's all propped up by the public. Believe me, like 3/4 of the funds probably have an LP that's a public entity, the EIF or their local development bank, or even both. But not much going into the later funding. And that's, we have the issue in Europe that pension funds cannot invest in the VC world, like in the US they can. That's a really big bottleneck in our community.
Right.
So
yeah. Would you also share what I have seen much differently in the US versus here, that also enterprises, corporates, they don't invest into startups. They don't acquire them like they do in the US. Therefore, of course, immediately has an impact on investment here as well, because you have less exit possibilities.
Very true.
Plus, of course, the startups that I was with, it's a very hard time to sell if you're a startup to an established company, your services, your products here, because they all know you're a startup. There's some risk. Okay, let's wait another 10 years, right? I have seen completely different approach to this, taking goods and services from startups in the US. I mean, I did beta testing for this data networking company that I worked for. And I had Europe, I had Asia, I had US. In the US, they took the stuff very early operational. And in Europe, there was not one single telco who took this stuff out of their lab into their real networks. It was like, oh no, this is a startup. We don't do this. And at the same time, the telcos in the US, they used our stuff in the real network and could enjoy the benefits, and the others they had in the lab, and that was all they did. And they still thought they are playing with the big innovations. Of course, they didn't, right? Because they didn't incorporate. And I have the feeling it's still the same these days, which makes life for startups
it's improving though. I mean, I think the corporate world in Europe has gone also through a few different waves of change in how they interface and work with the world of startups. Some players doing, for example, their corporate VC arm to then pivot that into some other program. In other cases, corporates did open innovation related programs or acceleration incubation style programs. And in some cases also in those entities, you evolved and made it, I would say, more sustainable. So the big issue with a lot of corporates in Europe, as far as I understand, is those that do want to work with startups, which are not many, for perhaps mentality or cultural reasons. I'm not sure the reason, but there are not that many that work with startups. And the few that do work with startups have experimented different ways of working with startups so that it is sustainable for them as a corporate to do business with such entities. And so I think in Europe, we saw a lot more corporates with mixed results in their CVC programs, some of them closing it down and pivoting that to something else. I think what's starting to become more and more popular here in Europe is the so-called venture client setup, which is basically like procurement office, just doing business with startups at more startup-friendly terms. So that's been more recently the evolution of it, and I think it's it's a mix of reasons. Some corporates in Europe have always led the innovation cycle in their industry, and some of them are very protective of that and like to keep that as a key driver of value in their company and not externalize it or open it up to anybody, period. So there's a lot, I think, in the explanation about that. And sometimes it's just like startups for a corporate are very, very difficult for the corporate to work with. So there's not enough flexibility, let's put it this way, in how the corporate interfaces with maybe its suppliers or, you know, its other stakeholders in the value chain. There's not enough flexibility to experiment working with new models, and there's not enough flexibility and maybe even risk-taking attitude to give it a try. Right. But I think those that have, and I think of groups like, you know, Bosch and Siemens, and you have cases, Telefonica, there's NL, there's, you know, different big players in Europe that I have understood that the best innovations nowadays are not built in-house, right. Not by everybody anymore. Maybe in some niches and in some places, you know, okay. The Swiss watch industry, I'm sure, innovates in-house amazingly well, leveraging hundreds of years of artisanal know-how, and, you know, but there's a bunch of other players that don't innovate anything anymore since a long time, and they become very quickly eaten up in the global marketplace by those competitors that do invest more. So doing business with startups has become, for some, a viable way to innovate, yet filled with a lot of operational challenges for the corporate. And in some cases also, I think some programs had very high expectations and ended up not really investing. I'm talking about the CVC programs. They haven't been really that good in sourcing good companies and then acquiring them and including them in their value chain. Yeah. It can't be said by it to all, but, you know, definitely a lot.
Okay. Yeah, Jacopo, we need to wrap it up here. I think we are way over time, but great talking to you. Maybe one last statement regarding EBAN. What's coming new hot on your side is something that you're very excited about, that you want to share?
Well, I mean, invitation to all our listeners to join us in Brussels for the European Angel Investment Summit. That's the event happening on 15 and 16 of October. Right. Great moment to meet, mingle, and connect with hundreds of angels coming from all over Europe. So that's what's keeping us busy. And then we're actually working on different initiatives now to help angel communities structure themselves, to do more syndicated deals, to do funds. So there's always something we're keeping busy with to give our community always the edge and the latest know-how possible. So,
all right, great. Thanks so much for your time and great insights, and keep the great work going for European angel and startup scene. Looking forward to meeting you at one of your events. I'm sure I will join again. It's a lot of fun also to go there. I can only recommend everyone who's wants to take a look at this to start there, and you probably will find lots of like-minded people there for sure. Thanks again. You have a great day.
Ralph.
Bye, Jacopo. Bye.